Hello everybody, Brian here, quantlabs.net. Here we are, September 22nd. It is 12:23 Eastern Standard Time. Alright, let's get into it. Alright, so big news. The place where to make money was here, but now Japan intervenes in FX markets for the first time in 24 years. It's all highlighted for you because we can do that. That's the name of the article. That can be found at centralbanking.com. Japan's central bank intervened in the foreign exchange market today, September 22nd, to prop up the yen for the first time since 1998. Now that is due to U.S. dollar strengthening as the Federal Reserve raises interest rates. What a lot of these central banks and economists don't tell you, there's misleading and half-truths. Why they're doing this, the central bank, is because they know that the yen gets weaker and it hurts the Japanese economy because it becomes more expensive for them to import product as the cost or the price of yen drops off. So as a result, they have to raise interest rates. A lot of the other banks worldwide, central banks, will have to do the same because, again, the media, all the economists will not tell you this, is that they have to stay competitive to the U.S. dollar. If they allow their currency to not compete against the U.S. dollar, not just for importing reasons, and especially at a high inflation rate, but there's also that they want as much foreign investment they can get into their country. So they have to raise interest rates to allow foreign investors to put money into the economy and get a return with a stronger local currency like the yen. When I'm talking about foreign investment, I'm talking about companies that are putting factories, plants, new satellite offices into the economy of, let's say, Japan. That will increase jobs and so on, and as a result, politicians like that. So this is why central banks have to do this. Okay, it's simple as that. All right, so that's that. Now, when you look at the analysis of it all, okay, now I like my tear sheets. We've done pretty good on this trade. There's other currencies that are driving this kind of return. This is a tear sheet since the last year, but you can see here that trade, among others, has done fairly well when the U.S. dollar has kicked in May of this year. And when you look at the Sharpe ratio, if you were to trade that, you'd be 2.98. You'd be having, again, Goldman Sachs and the like wanting to hire you. Most importantly is to watch the monthly returns. This is where it really counts. Because of the volatile market, you can clearly see we've had pretty good returns for the last 5 months with the current mix of currencies to have as well. Now, when you factor in another tear sheet without the Japan, this is again all currencies, it's not as strong, but what matters is the type of analysis that you need to do, which not a lot of people are going to do, are to look at this steepness of this curve. Now, this event just happened of the Japanese bank intervening is just last night. But what you'll find most likely is if you look at the Japanese yen, it started to flatten out, okay? Because a lot of the foreign central banks are needing to respond to this as the U.S. dollar rises. So they have to intervene. So this is what's happening is that these currencies, these pairs, U.S. dollar, Japanese yen, will start to flatten out. Now, once they start to flatten out, you're deploying capital on something you're not getting as much return. Now, the one thing I will say is that all the ETFs out there, all the sectors, all the stocks, you're not getting any form of return right now. Nothing. Here's why. When you look at the Finance Yahoo right here, you can see it's all red, except for obviously crude oil and gold. Even crypto's getting hurt, and a lot of the foreign markets are getting hurt as well. There's not a lot of return out there, okay? So there's not a lot of places to go. So you have to trade currencies if you want to get returns. From the last couple of weeks, since these Federal Reserve is starting to act to on the higher inflation environment. All right, so there's that. Okay, so I'm going to stop right there. Now, this is the important part. I'm gonna put on my little marketing hat here. First off is this one right here. If you want to learn more, you got to get in on the quantlabs.net/books. I'll give as part of get a couple of books on technical tools that I can use back on Windows to help get a better insight on the market that you can't get anywhere else. A couple of books will take care of that for you. Just join; it's free, no harm done. Right? You don't like it, you can get out of the email thing. More importantly, if you want to stay ahead of everybody, getting return instead of getting killed in the markets wherever you go, you got to join this. My Quant Analytics that goes over the different types of ETFs you should be into, or in my case right now, only Forex currencies and what to do, as well as I do like my crypto, but with crypto, it's down about 25% this month, which is not good. So get in on this one because this price is going up. All my prices are going up. I'm not joking around anymore. Okay, just so you know. So you want that? That covers Forex as well. For active, what I'm doing in my own trading. That's the difference between me and other people. Now, if I want to take profit on my current positions, which all I have right now is Japan, I'm closing them. I'm moving everything into other currencies that are showcased here. There's about 3, 4. I've done the analysis. They've been pretty strong, and they're continuing to be strong as long as those central banks don't intervene. I expect they will. So what am I doing? I'm right now trying to find, is there any place to get return? Currently not. But the other option we have is just to sit on our hands, put everything in the US dollar, be safe, and you're getting a nice return for doing nothing by just holding US dollar. I've done that for like 6 months this year already. So I'm trying to nibble in the market, get in on where the action is. And right now, the only action I'm seeing that's profitable is currencies. That's all I can tell you. Again, you want to know more, get on the books here, quantlabs.net/books, or personally, I would get on this now. I will be raising this probably $10, maybe $20 over the next week, 2 weeks. So it's going to be an extra $120, $240 if I do $10 or $20 per month. Okay, you get in on that, you're permanently grandfathered in. All right, so we'll leave it at that. And thanks for watching, and have yourselves a nice day.